What's up, everyone? All right, so back in my office here. Last 9 days, I was on my traveling trading station, which were these two laptops plus my two USB monitors right here, so one on either side. So that was great. Well, you know, if you were tuning in for the recaps, the first 6 days were good, and then day 7, 8, and 9 were not so great. I got a pretty bad case of FOMO from missing AERC on Tuesday last week, and as a result, I traded pretty poorly on Wednesday, Thursday, and Friday. Today wasn't really a lot better. We'll talk about it during the recap. It is a green day, which is good. I made back a little bit more than what I lost on Friday, so kind of working my way back up. But you know, I'm trying to think about the best way to get through this bear market. You know, we're obviously in a bear market. We have been for the last 5 months, 6 months, just about. And I'm making progress. I'm making money. I'll preface that as always by saying and remind you that trading is risky. My results are not typical, and there's no guarantee that you'll be a successful trader, whether you learn from me or you trade on your own. So, paper trade very cautiously. Don't trade with money you can't afford to lose. Having said that, during these last 6 months, I have been making money, just not as much as typical. And what's getting me frustrated is I'm spinning my wheels a lot and I'm churning commissions. And so seeing how much my broker is making versus how much I'm making is getting under my skin a little bit. And I decided at the end of last week, I was like, you know what? Put on restrictions, reduce your share size, slow down. Over the last 9 days, I only made an average of $1,000 a day. I don't need to be trading with 30, 40,000 shares if I'm only doing $1,000 a day. Reduce your share size. So I did that today, but then, you know, I ended up being undersized for what ended up being a really clean trade, which got me frustrated. And rather than just take that trade off the table, I was like, well, I'm just gonna hold the whole position because maybe this will open up and end up giving us like a 1 or 2 point move, and I can actually capture like a whole $1 or $2 a share, which I don't typically do. I typically would trade with bigger size, scaling in, scaling out. And this trade, I just took small size and kind of held for the bigger move, and I was up almost $1 a share. I didn't take it off the table, and it ended up coming all the way back down and stopping me out for a loss. So I started the first trade red, and I was agitated because I was like, that was stupid. I should have just sold it. You know, I'm kind of like put these restrictions on, and then I'm not trading normally. I'm just being like getting in my head. So that wasn't really a great start. But then we had a trade on Dawn that ended up being pretty nice, and AERC also ended up rallying. So I ended up finishing in good shape today, but still trying to figure out the best way to position myself for, you know, the summer ahead, because we're at the very beginning of the summer and I expect it's going to be a slower summer. So I want to make sure I don't dig myself a really big hole by taking too much risk on, you know, just not the right stock to take that risk on. So that's what I'm trying to prevent. But I don't want to get in my own way by, you know, just, I don't know, setting restrictions too tight that now I'm just getting antsy. I don't know. So we'll talk about that during the recap. And I think there was something else I was going to mention, but so one thing here, you know, one of the things I was thinking about with learning to trade during a bear market, which I've said a number of times, but I'll just keep reiterating it, is that if you can keep your head above water during these market conditions, I think you're setting a really strong foundation for the future. I did an interview with a member last week, and that interview got uploaded. He recently got one of his profitability badges, and so he started trading in January, February of 2020, which was sort of like when the market was dropping. And then, of course, the market rallied. And so he traded in a simulator all the way until the end of the year, until I think it was like October, maybe November, something like that. He traded in a simulator for like 9 months. And then he flipped the switch and went live. And he lost a little bit of money at first, and then he started making money. And from that point, you know, he ended up doing really well, and he got his first badge. So I was thinking about that because for someone who's getting into the market right now, you might think, oh, the market's weak, I'll just wait till it's hot. But this is the time that you could and should be practicing in a simulator and testing the waters. So, you know, if you can trade in a simulator and gain experience in this kind of market and even make some money, well, then you're also preparing yourself for when the market picks back up. And so I think that there's multiple reasons that it's a decent time to be practicing. It's not a great time to be starting with real money. It's a better time to be practicing in a simulator. So for people that started 8 months ago and have been in the simulator for 8 months, I get that that's kind of like, this is frustrating. It's like, you know, people who graduated in 2008 into a recession, you know, which was like me. That's when I graduated college, right into this great recession, no one's hiring. So, you know, that's just the luck of the draw. And it forces you to get a little creative. And that's part of the reason that I'm actually a trader, is because, you know, it was just getting creative and finding a different way to make money than a regular 9-to-5 job. But for those right now, maybe it's getting creative by getting more practice in the strategy, trading with smaller size, getting really disciplined, and, you know, kind of chalking it up that this might be just a year where I'm just trying to keep my head above water, and, you know, things will get better down the road. So anyways, I hope you enjoy the recap. As always, trading is risky, trade cautiously, and I'll see you back here first thing tomorrow morning for the morning show. All right, so we'll go over the trades from today, finishing in a pretty good shape. Green in my retirement account, $7,798.48. Red in my main account, $1,600. So today the first trade was on RDBX, which I traded in both accounts. Why did I trade it in both accounts? Well, at the end of last week, I set a 6,000 share max position size on both accounts. And today, on my first trade, I jumped in RDBX with a very nice entry right here at about 1720. But I hit my 6,000 share max size, and I was like, I felt frustrated, because I was like, it was a great trade. It goes up to 1750. I'm still holding, and it looks good for micro pullback. So I was like, you know what? I'll trade that micro pullback in my main account. So then I'm trading the micro pullbacks in my main account up to here. And then I bought this, and I didn't take any profit in my retirement account. And then right here, I bought this dip, and it pulls all the way back down to 1737. And then in my retirement, I was only up, you know, I went from up 80 cents a share to up only 40. It pops up here, I still held. It drops back down to break even, I still held. It comes back up, and then I finally stopped out right here. And, you know, it's kind of like I tried to tighten down my share size, because I felt like, you know, the market's cold. I'd had 2 red days in a row, you know, just cool down, trade with smaller size for a little bit, kind of just, you know, whatever, just gives me a chance to cool off a little bit, because I was pretty frustrated at the end of last week. But then, because my share size was only about a third of my normal decent sized position, I didn't really feel like I had enough profit to sell it up here. And then, you know, I started trading in both accounts. I ended up going from up, you know, 80 cents on 6,000 shares to down 10 cents a share, and I took the loss on it, which kind of also felt frustrating, because I should have just taken it off the table for, you know, $3,000 or whatever, $4,000. And so I kind of, this is sometimes where there can be a challenge with putting restrictions on yourself, where you start to kind of not trade the way you normally would, because you're kind of like, I guess it's almost, I would sort of think of it as like, sort of like a failure in a way, because you set this initial idea of, I'm going to trade with small share size, and then next thing you know, you've taken the max you can, the trade ends up working, and then your frustration that you didn't take it with big size leads you to immediately say, you know what, I'm going back to regular size positions. This is stupid. And that's kind of how I felt today. You know, I was just like, that's frustrating and stupid. And so sort of a resistance to really fully embrace the idea that I put forth on Friday of trading with small size for a few days just to sort of clear the slate. Because what I didn't want to have happen was to have, a third big red day today. I was down 10 grand on Thursday. I was down 5 grand on Friday. And I traded badly on Wednesday. And you know what? That all started because of my FOMO from missing AERC on Tuesday. I missed AERC on Tuesday, and then I came back swinging hard Wednesday, did not trade well. FOMO on Thursday went red. FOMO on Friday went red. And so ultimately today, the decision to not just take the small base hit on RDBX was, I think it was probably in that moment, I was like, being up 50 cents a share on 6,000 shares isn't enough. This thing's finally starting to move. Finally, we have something that's opening up. And I was looking at RDBX on the daily, and I was like, this thing, if it breaks 18, 19, 20, has room to 27. We might get a nice move on it. FOMO kicks in, and I'm like, I'm not going to be able to make good money with 6,000 shares. I'm not going to be able to make back the 15,000 I lost with 6,000 shares. And so I wasn't able to break the through from the clutches of FOMO today, I would say, because I trade with small size, but I fought it and I didn't like it and I didn't accept it and I didn't take the small base hits with the small size that I should have. I instead ended up holding a small size position and tried to get like $1 a share out of it. So sort of a failure there. Although on the other hand, I am in the green. I rallied back in the green, and that was thanks to Dawn, DAWN, which was our leading gapper. And really impressive move from $7 to 16, high of 15.96. We haven't seen a move like that pre-market in a little while. So that was nice to see. And I traded it on this break right here and on this pullback right here. So I was able to make some money on it. I didn't trade it maybe as well as I totally could have, but all in all, I thought I did pretty well on this one. So this one I trade pretty well on, and at this point, I started trading it. I was down 700 plus 1600, so I was down 2500, and so I was base hitting to make back the loss. So once I was red, I was like, okay, well, I just need to base hit to get myself back to green. And, I ended up doing pretty well in those base hits. AERC made 800 on it. This one had a nice break on the daily over $14. It's still holding up quite nicely. My entry was about $13.75. So had an entry down here, it continued higher. It did halt down though, before rallying back up. So things got a little choppy after the open this morning. We had a halt down there, RDBX. You did get a nice curl, but it was still pretty choppy as well. This had a candle right here. This candle dropped almost $1 a share. This one was over $1 a share. Dawn, look at this candle right here. That one was pretty bad. So we had some pretty nasty candles this morning following sort of a little bit of clean action. Big reversal, sell off into a halt there. So yeah, I don't know. I think that this is a good time to throw in the towel. I don't really feel like I did as good of a job today, kind of staying keeping it mellow as I was hoping to. So I think it's better I just stop here, grateful to be green, and then come back tomorrow and just kind of try again with smaller size. And perhaps 6,000 shares is just a little too small. The problem was last week, I just found myself getting way too aggressive. So like on Wednesday, I had missed the AERC trade the day before, and then I don't even remember what I was trading, but I just started really being super aggressive, and I feel like I needed to kind of throttle back my share size. On Thursday, I had the cheap stock that I took 75,000 shares of. That was too big of a position. And I felt like both Wednesday, Thursday, and Friday, I was risking $20,000 to $30,000 if I had gotten caught in one of those flash, $1 drops. And that this isn't the market for me to be taking that level of risk. It's too much risk. I just can't dig a hole that deep. So I sort of thought, well, with 6,000 shares, you know, you're not going to be able to dig a hole very deep. Maybe $6,000 at the most. That's tolerable, but you're not going to be, you know, potentially catching a $30,000-$40,000 loss the way I could with 50 or 75,000 shares. But on the other hand, you know, a base hit with 6,000 shares might only be $600, $700, maybe $1,000. And when you get a nice 50, 60 cent move, it's not going to put me up 10,000 bucks the way it would with 12 to 15,000 shares, right? So I think that's where today I was just feeling like I wasn't quite sized heavy enough. And I don't know, I don't really know what the right move is for tomorrow. I don't know if I should just say stick with 6,000 shares and just try to work within the, because the thing is my starter is 6,000 shares. So then I'm going in full size right away. I'm not giving myself room to potentially average down. You know, if I'm going to really trade with that as my max, then my starter has to be 2,000. And that feels like that's really a bit too conservative for right now. So I don't know. You know, and again, look, today we ended up having a 100% move on Dawn. You know, I didn't trade 25, 30,000 shares of it. I probably wouldn't have in any case, but you know, we ended up having a pretty nice move on it. We had a pretty nice move on AERC. We had some nice moves on RDBX. So, you know, what this really comes down to is the frustration that I have that I'm not really good at kind of self-regulating when the market's cold, or, you know, like last Wednesday, Thursday, Friday, the FOMO just pushing super hard, and that I don't trust myself that if I have an ability to take 75,000 or 100,000 shares, that I won't just go ahead and do it because I get fired up. And that's where I get a little disappointed, that I feel like I have to have some hard limits to just keep some parameters on me, and that I can't just sort of scale up when it's the right time and then the rest of the time be scaled down. It's really hard for me. So, you know, I put a hard limit on my account, and I think that ended up feeling like I was trying to do a race with training wheels on, and I just got myself even more frustrated, which was sort of not the idea. That was the opposite. So I'm still trying to figure out exactly the right way to position myself. We're early in the summer, but it is cold, the market, you know, we're in a bear market. So yes, some nice opportunities today, made some money, happy about that, that's great. But I need to sort of figure out a way to position myself to get through this summer without getting, you know, really beaten up too badly, because you know the market's weak, and we've just had 3 really big red days here on the S&P. I mean, in 3 days the S&P 500 is down you know, just about 10%. This is substantial. And so this is, you know, a nice little rally, kind of end of the week before last, and then midweek last week, and then Thursday and Friday we sold off hard. We had the CPI numbers that were bad, and now, you know, we're back down here at the low of this channel. So we're definitely in a market that's not very forgiving. I think that, you know, one of the things that I would say is encouragement is that this is a good time to be learning. Why is it a good time to be learning? Well, traders who approach this really usually in a smart way trade in a simulator. They trade in a simulator for 5 months, 6 months, maybe even a year before they trade live. So trading in a simulator during a bear market, you're not going to be losing real money, but you're going to be conditioning yourself to be patient, to hit those A quality setups hard when it's cold, to sit on the sidelines. And if you can get through a bear market, it is going to set a really strong foundation for when the market picks back up. So I would give you that for encouragement. And you know, in my own experience, I am making money in a bear market. I'm not making as much as I was making in a bull market, which is not surprising because I'm a long bias trader, and also small caps have been, you know, pretty, you know, just weak in general, whether you're long or short bias, there haven't been as many opportunities on the small cap side of things. So even the short bias small cap traders aren't having a blockbuster year right now. It's just a slow year for momentum traders. Whether you trade momentum long or short, for momentum traders, it's been a slower year. So, you know, okay, it's a slower year, but I am still making money in a bear market, keeping my head above water, and just trying to sort of figure out how I want to position myself this summer, so I can not get myself super stressed out. I mean, let's just, you know, accept the reality that it's slow and adjust expectations. And this is probably, I would look back maybe a year from now and say, Ross, that really wasn't a very smart time to be swinging for the fences with 75,000 and 100,000 share positions. That was pretty stupid. Maybe that was even reckless. You were risking a ton of money. Why? You were so bent out of shape. You wanted so badly to make, you know, your monthly goal. Well, it was a bear market, and you'll hit that monthly goal when the market's hotter. There's nothing you could do about the fact that it's cold. Sizing up and taking huge position is just exposing yourself to unnecessary risk. So, you know, that's kind of my, that attitude is the same. Perhaps there's some middle ground between 75,000 shares and 6,000. And maybe Friday I was a little bit frustrated and I just decided to put a really big kind of, you know, restriction on my account so I wouldn't have another day as bad as I did yesterday or Friday or Thursday, which, you know, I was able to avoid. So maybe tomorrow I can scale back up a little bit. I just have to figure out what's best, because, you know, I need to be thinking about preserving capital and you know, keeping my head above water for sure. So I think there's some middle ground. I just have to figure out what it is. Well, it seems like we've got a squirrel outside, so I'm gonna let you guys go, but those were the stocks I trade today: Dawn, AERC, RDBX, and I'll be back at it first thing tomorrow morning. Reminder as always, trading is risky, my results are not typical, and there's no guarantee for success, whether you learn from me or you trade on your own, so take it slow. I hope you really enjoyed that video, and make sure you hit the thumbs up and subscribe to the channel if you haven't already. Our goal is to hit 1 million subscribers this year, but we won't get there without your help, so please, please, please hit that subscribe button.